Hello to all traders and welcome back to another market review brought to you by Orbex. So where can we begin apart from the metals hitting more record highs, gold breaking 4,400 for the first time and cementing its place as probably the most valuable safe haven asset in the world at the moment, really seeing traders and investors flock to the yellow metal because the renewed hopes that the Fed is going to start cutting rates again and again next year. There is a lot of talk in the markets that price action is going to possibly go higher. We did say 5K by the end of next year, but it could be even sooner than that. And then silver as well topping another fresh high. And it doesn't look like it's going to slow down anytime soon. Metals are up 70% this year alone. So that's just incredible amount of bullish rhetoric. And as you can see on the daily chart here from September, when we had this long prolonged consolidation from, you could say, just before the summertime, we just started to move higher and hitting this triple top, you could say, before having very heavy pressure. This is when the Fed was very indecisive about its next move. Obviously, you had the US government shutdown as well, which boosted the dollar actually and had a little bit of a drawback for gold. But since then, as you can see here, a nice channel developing on the daily chart, and it doesn't look like, as I said, it's going to slow down anytime soon with the RSI. Not really too overbought. It is going into that area, but we've had major overbought signals before that as well. So let's just take a look on intraday because that's the main characteristic we're looking at. And as you can see here, from the early Asian and Australian opening, we've had such a bullish move over $50-60 in just a short space of time. But you know, with the weekends, a lot of talk and decisions are made, and with doing so, we do get these weekend gaps or these big Monday morning moves, which we're seeing at the moment. So in the near term, you could say that we are seeing a slight bearish divergence at the moment because that's looking likely to possibly hold proceedings for now. But in the near term, as you can see here, there is a slight dive down, but if we can break the previous top just below 44.20, then prices have so much further room to grow. And as we've seen before in the last few months, there's no slowing down at the moment, so we'll wait and see if that does come into fruition. Silver, on the other hand, it is even more bullish than gold. You could say that it's been hitting record peak after record peak, not really slowing down at all. We're having some slight consolidations, but in the overall vast picture of it is that we are very bullish on silver as well. But much like gold, we are hitting a bit of a bearish divergence at the moment on most of the stochastic MACDs and the RSIs that we're looking at. We're just seeing now that prices could just start having a little bit of a pullback before potentially jumping higher. So I mean, for silver, the psychological area is towards 70. For gold, you know, we've broken 4,400, 4,500 is the next psychological target, but it's just not looking likely it's slowing down anytime soon. With the rest of the year, you know, where are we today? The 22nd of December, not too long to go. Obviously, markets will be closing at the end of this week and next week as well for the new year. So we could have a little bit of slowdown in momentum, but obviously as January kicks off, we start again with where's the Fed going, where's the inflation going, where are job numbers going, is there going to be a trade war next year as well? All these matters will start coming into the focus once again, and then we'll see if we have any more surprises in store. But as always, we'll bring you all the latest in fundamentals and technicals as they come. So stick with us, stay ahead, trade responsibly, and we'll speak again next time around. Bye for now.